Are you looking for a way to boost your income without quitting your full time job? Imagine making an extra $2,500 every month utilizing only a capital of $25,000. In this video, I'll walk you through the steps to leverage your 25K investment to generate a whopping 10% each month, all while continuing your regular work routine and only spending a few minutes to trade each week. Hi, my name's Gautam. I'm a former finance executive turned options trader, and I'm here to help you escape the 9 to 5 grind like I did with the power of options trading. So if you're ready to change your life, hit that like button, subscribe to my channel, and let's get started. Also, don't forget to sign up for my free options newsletter, link in description below. So now that we have some housekeeping out of the way, let's dive in and get started. So first things first, what are options? Options are financial contracts that give you the right, but not the obligation, to buy or sell an asset at a certain price before a specified date. There are two types of options: call options and put options. Call options give you, the buyer, the right to buy an asset, whereas put options give you the right to sell an asset. When we talk about selling options, we mean writing or selling these contracts to other traders. As an option seller, you collect a premium upfront, which is the price paid by the buyer for the right to buy the asset. To start selling options, you'll need a brokerage account and have it approved for options trading. So now let's get to the actual strategy, which will allow us to make $2,500 a month with selling cash secured put options. A cash secured put strategy involves selling put options and setting aside enough cash to buy the stock if the option is exercised. For example, if you sell a put option with a strike price of 50, you need to have $5,000 in your account if you're assigned. Next, let's talk about why selling puts can be a great strategy. First, it's a good strategy to generate income because you collect the premium as soon as you sell the put options and you get cash in your pocket right away. Second, you get to buy your favorite stock at a discount. If the stock drops below the strike price, you'll be assigned shares, but at a lower price than the current market price. For example, let's say a stock is trading at $100. You sell a $95 put and collect a $3 premium. If you're assigned, you're effectively buying at $92, which is $95 minus the $3 premium that you've collected. That's an 8% discount to the current price of the stock. This strategy works well in bullish or sideways markets. You profit as long as the stock does not fall below the strike price. Next, I'm going to show you how you can make $2,500 a month selling cash secured put options on two different leverage ETFs. If you don't know what a leverage ETF is, a leverage ETFs are financial products designed to amplify the returns of an underlying index. So for example, we're going to take NVDL. NVDL provides us 2x leverage exposure to the daily movement of the NVIDIA stock. So I have the NVDL options chain pulled up here on Thinkorswim. We have the options chain for April 25th, which is expiration for this Friday. I generally like to sell my put options with a delta of 15 or 20. So looking at this options chain, I like the 26 strike price. You see that there's a gap between the bid and the ask of 63 to 77. So I'm fairly confident that if I put an order for 70 cents or $70 per options contract that, we'll be able to get a fill. Let's do some math here and see how we're going to get to the $2,500 target income. So as we were getting $70 premium per option contract, we're going to do 70 times 9 contracts is going to give us $630 a week times 4 weeks is going to get us to the 2520 target income potential for the month. Now let's see how much it's going to cost us to get to the 2520. So since we sold 9 option contracts at a strike price of 26 times 100 shares per contract, that means that you're going to have to invest 23,400 to get to this income potential. Now let's calculate a rate of return on this investment. So 2520 divided by 23,400 is almost 10.7, almost 11%, which is absolutely fantastic. So another ETF we could do the same trade with is TQQQ. And TQQQ is a leverage ETF that tracks the NASDAQ 100 or QQQ. In this case, again, I generally like to sell a 15 to 20 delta. Looking at the deltas right here, I see the $40 strike price gives us a pretty good premium of $1.03, so which is basically $103. If we sell 6 contracts of TQQQ, $103 times 6 contracts times 4 weeks ends up giving us 2472, which is close to the $2,500 target. So you can see that this is another alternative. If you don't want to go with NVDL, you can make the same amount of money selling TQQQ puts. Since we're going with the $40 strike price and selling 6 contracts, so 6 times 40 is $24,000, which is basically how much we intended to invest, not more than $25,000. So I hope you enjoyed this video and learned something useful. If you did, please give it a thumbs up, share it with your friends, and leave your comments below with any questions or thoughts. Thanks for watching, and I'll see you in the next one.